Hello again, and welcome back to another daily technical analysis video. In this video, we'll be covering BNB, and we're going to start from the daily time frames and work our way down towards the 1 hour time frame. So now in our macro perspective, we see again we are still in this channel, and currently we have rejected off the 0.25, and it seems likely to see a continuation downwards. Why do I say that? I say that because we are in a confirmed downtrend, with this peak around here being another confirmed lower high compared to this high right here. So because we're in a pre-existing downtrend, it seems likely to continue going down, and therefore our targets would be first the daily S2, and then the bottom of the channel, followed by the 377 confluence, the daily S3. Now one thing you want to keep in mind is whether we actually see a higher low set in around here, even off the daily S2. It is also in confluence with the Fibonacci 0.55 from this previous impulse. But what my question would be is whether we can do a retracement for this impulse, especially when we're downtrending. Because if, for instance, we did a retracement for this level, from this peak to peak, it clearly just destroyed it. So maybe this, because it's a downward direction, it can just destroy it and keep going towards the downside. Or we can see a reversal starting to occur here with a higher low to be produced around here before pushing to the upside. But one thing that I do want to concern towards further downside is the momentum. Again, similar to the other day, there's a cross, but we cannot say that there's a cross until the day has been closed. So right now we're waiting on the day for closure, but it seems very slanted towards the downside. So if this does close downwards, it seems likely the price will still continue to fall. The RSI is still towards the downside as well, with the rejection of the 50. EMAs are also still bearish. We see the bounce off of the 21, and now potentially a continuation to the downside, especially since it's kind of diverging with a slant of a 4 o'clock. So that's a bit more bearish. Now if we go to our 4 hour time frames, we can see our previous channel that we were playing in. It seems a bit choppy on the outside of it, but right now it could be a breakout and retest of it. But one thing that I do want to keep in mind is that we have a bullish divergence. Price action creating a lower low, while the RSI is creating a higher low. Very evident here in this example. Now because of that, it either may be a full reversal, or we can see just a retracement up to the 0.55 before it gets rejected. Typically for divergences, it has a minimum retracement of the 0.55, and right now it's around there. But given that we are in a clear downtrend, we could be taking a short around here. Maybe even a position like this with a stop loss above here and targeting lower levels. But this bullish divergence, it is actually occurring right above that level of support the price action has previously went to. So it could be finding support actually off of here, and therefore potentially a reversal, especially given that the momentum on the 4 hour may be crossing above the 20 level and has been oversold for quite some time. So maybe it's either a reset or a pushback to the upside. But as for right now, because we're in this clear downtrend on both the 4 hour and the daily, I would be taking shorts, and therefore continuation shorts to the downside. Where would my targets be for the downside? I would be aiming for, there's a lot of 4 hour levels, but it's not as clear, especially this level right here that we just recently bounced off of. It's not too clear to be a strong support level, so I would look for the next one, which is the bottom of the wick here, and the top right here. So maybe even something like this, and then followed by the HS1, which is slightly below the 4 hour support around here. But it would look something like this. And then you just got to keep in mind that the momentum still towards the downside, and it might cross up, so we want to be careful for that one for any shorts. Now if we go to the lower time frame, the final time frame, the 1 hour time frame, we see that there's another bullish divergence here with the rising stochastics and rising RSI, along with the decline in price action. So it could be contributing to this rise as of right now, and therefore maybe the bullish divergence has been played out already. It seems a bit choppy, but in general we are in a downtrend, especially on the 1 hour time frame, which is also confirmed by the EMAs. So we could see that decline, but right now it seems to be resetting, and hence the rise, maybe even to find resistance under here again, before going back down to the downside. But what we want to be aware of is the upward targets if we do break above here and continue to the upside. If we did play this trade, I would put my stop loss above here because of the fact that this is the previous highest peak, and therefore if we do get closures above here, then it could be considered some sort of reversal or preparation for the next trade. For upside targets, we kind of have the median right here of this previous channel. Not too strong, but I would suggest maybe even some of the EMAs as the first line of resistance, followed by the channel median. And then more of a stronger level would be the top of this channel, which is also in confluence with the HR1. So we could find resistance here. Let's see if it's connected to dailies. It is one daily level here. 2. We got to keep in mind we got the daily S1 at the median as well. So there's these levels around here, mainly just the channels and the EMAs in between. And for the downside, we kind of already had the hit here. We'd aim for the next level. The next levels here, and then the daily S1. But that's it for this video. Hope you like it, hope you learned something from it. Please like, subscribe, and hit the notification bell for more videos like this and continuation of this series, so you can see whether something actually works out or not. Cheers.